So quite a few central bank decisions last week. I did do a separate video when it comes to the Fed, but long story short, asset purchases and key interest rate unchanged. When it comes to GDP and inflation forecasts, bumped higher, median dot plot didn't budge. And when it comes to the Bank of England, no changes there, but they did talk about their lack of an intent to tighten monetary policy until key conditions are met. So the Bank of Japan last Friday, I mean, these guys have tried everything. Rates in negative territory, check. Balance sheet that's greater than GDP, check. Yield curve control, check. You've got asset purchases that include ETFs, check and check. They did increase the yield curve band to 25 basis points, as well as removing their ETF targets, and where from here on out they're going to be linked to topics. So in the case of the first three central banks, no changes in interest rates, but the same can't be said when it comes to the next three. In this case, when it comes to the Central Bank of Brazil, they've actually increased rates by 0.75%, and they're pretty much guaranteeing that at their next meeting, they're going to raise it by the same amount. Central Bank of Russia raising it to 4.5%, and where monetary policy normalization will depend on, and I quote, the development of the situation. But none of the first five were anywhere near as interesting as what we got with the last one, the Central Bank of the Republic of Turkey. The reason why is because going into the event, expectations were for a 1% increase. This is especially following that bump in inflation to above 15%. So what did the central bank decide to do? They increased rates not by 1%, but by 2%, beating expectations. And that's positive for the currency. And as a result, we saw USD TRY, or the dollar against Turkish lira, start to fall. So what exactly happened? Well, they raised it to, and that's not a typo, to 19%. But over the weekend, the central bank chief got sacked and was replaced by someone who is expected to take rates back down. And that's the reason why we saw USD TRY gap higher. It's been trying to claw back some lost territory ever since. So in terms of this morning, we did get the People's Bank of China. They kept their key rates unchanged. We're going to get the Swiss National Bank, the South African Reserve Bank, as well as the Banco de Mexico on all three on Thursday, with plenty of central bank speak and testimony in between. There's also going to be a few bond auctions for the US, though as long as the bid to cover ratio are relatively healthy, shouldn't be an issue. And when it comes to economic data, we got preliminary manufacturing and services PMIs on Wednesday. We got US durables as well as consumer data, US consumer data on Friday. And when it comes to the UK, we've got CPI and unemployment data.